Welcome back to Investing Talk Podcast.
Today we're looking at BWX Technologies. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. Right. So when you look at BWX Technologies, the story's really shifted, hasn't it? It's gone from this, steady government contractor to something more like, hypergrowth, really driven by defense needs.
And the trigger for looking at it right now is those Q3 2025 results. They didn't just meet expectations.
No, they really blew them out of the water. Seriously.
Okay, so let's break that down. Because just saying beat doesn't quite capture it, does it?
Not at all. Adjusted EPS came in at $1. The street was expecting, 0.85? So that's a big beat.
15 cents above, yeah.
And revenue was the same story, $866 million versus around $792 million expected. So well over $70 million more than forecast.
That kind of gap,
Yeah.
What does that tell you beyond just good sales?
Well, it signals strong demand, obviously. But maybe more importantly, it points to really efficient execution. You're seeing some powerful operational leverage kick in.
Okay, operational leverage. For listeners, maybe unpack that a bit, especially for a company like this with, complex, high-security manufacturing. What does that mean day to day?
Sure. It basically means those big fixed costs, running the secure facilities, maintaining all the clearances, the specialized tech. Those are mostly covered already.
Right.
So when they win a new high-margin contract, it doesn't just add revenue.
Yeah.
It adds disproportionately to the profit because their cost base doesn't really scale up at the same speed. That's efficiency in this kind of capital-heavy sector.
And the sources really tie this back to defense, don't they? This isn't about, say, commercial building cycles. It's the nuclear navy.
Absolutely. I mean, look at that big contract they landed in September 25. $174 million for U.S. naval nuclear fuel.
That naval connection seems critical. You mentioned they're a sole source provider for some things.
Yeah, for really critical components, like nuclear propulsion for submarines, for aircraft carriers, this isn't just, sticky revenue. It's essential revenue, locked in for potentially decades.
Which brings us to maybe the most important number from that Q3 report, the one that kind of tells the future story.
The backlog, yeah.
Tell us about it.
Okay, so by the end of Q3, their contracted backlog hit $7.4 billion. That's a record, just huge.
$7.4 billion, wow. And that's up massively year over year, right?
119% increase compared to the year before. Think about that. They basically doubled their visible future workload in just 12 months.
What does a backlog like that do for the company's, say, risk profile?
It fundamentally changes it. I mean, it really shields them from the short-term budget ups and downs in D.C. They're less like a typical defense contractor fighting for the next project and more like almost a utility provider for essential defense stuff.
Because the revenue's locked in, the contracts are set.
And the customer, the U.S. government, is, the most reliable payer on earth.
And you saw management's confidence reflect that after the earnings beat.
Definitely. They raised their non-GAAP EPS guidance for the rest of 2025. And their look ahead for fiscal 26 is really strong. They're talking low double-digit to mid-teens growth for adjusted EBITDA and revenue. That's projecting sustained fast growth based on contracts they already have in hand. Okay, so we've got this strong current momentum locked in by that massive backlog.
Yeah.
But what protects them long-term? Let's talk about their competitive advantage, the moat.
Right. When you look at what BWXT actually is, they're the leader in nuclear components, fuel, especially naval reactors. Why is that specific niche so hard for anyone else to break into?
Well, it's layered, really. There's a tech complexity, sure, but the real moat, it's the regulation and the security clearance side of things.
Ah.
Yeah. To make nuclear parts for the U.S. Navy, you need decades of proven performance, proprietary know-how, super secure facilities, and deep trusted relationships with the government. It's an incredibly high barrier. You can't just decide to start doing this tomorrow.
It sounds like it's about credibility as much as capability. They're selling absolute reliability to, the world's toughest customer.
Exactly. And that mastery, that level of technical skill, is why this whole nuclear renaissance thing, the civilian side, is now looking their way. They're kind of perfectly positioned for this global shift towards decarbonization, towards reliable, clean power.
And the sources pointed to a specific deal that really locks them into that future energy market, right? The Rolls-Royce contract.
That's the one. It's a detailed design contract. They're designing steam generators for Rolls-Royce's SMR program, small modular reactors.
SMRs, right. Those are seen as the future for localized clean power, replacing old coal plants and things like that.
Precisely. So by partnering with Rolls-Royce, BWXT is tying its future not just to U.S. naval defense, but to long-term global clean energy infrastructure. It's a huge strategic play.
Diversifying through their core expertise. All right, so let's look underneath all this growth.
Yeah.
How sound are the financials? Because in this sector, execution quality matters, maybe more than just speed.
Absolutely critical. If you look back at, say, the full year 2024 numbers, revenue growth was solid, 8.31%. Pretty good for a big industrial defense name.
Okay.
But here's the key thing. Net income grew much faster, up 14.68% year over year.
Ah, okay. So why is that gap 8.3% revenue growth, but nearly 15% profit growth? Why is that important for an investor to see?
It tells you they're not just getting bigger, they're getting more efficient. That spread shows each new dollar revenue is generating more profit than it did the year before. Their net margin is strong too, around 10.6%. That signals tight cost control even while they're ramping up production to handle that huge backlog.
And what about returning cash to shareholders for investors looking for maybe some stability in today's market?
Yeah, they've been pretty consistent there. They have a dividend, currently $1 a year, paid quarterly at $1.25 per share. It's not a massive yield, but it shows a commitment to returning capital while still funding all this internal growth.
Okay, now we've got the fundamentals, the long-term picture. Let's get practical. If someone's thinking about maybe getting in now, what are the key dates, the near-term events that could really move the stock?
Right. Well, all eyes are going to be on one main event, the Q4 earnings release. That's currently penciled in for February 5th, 2026.
And what are people looking for there?
Guidance. Detailed guidance for the full year 2026. Given the momentum and that $7.4 billion backlog, if management confirms that strong growth trajectory everyone expects, well, the stock could really take off.
But there are maybe less obvious things happening before February that could impact the price too.
Correct. Keep an eye on December 12th, 2025. That could be a major date for ETF rebalancing.
Index funds.
Yeah, especially funds tracking nuclear or clean energy themes. If big ETFs decide they need to increase their BWXT weighting, maybe because of the SMR angle, that forced buying from institutions can definitely move the needle.
And then early next year, we get the institutional filings, the 13Fs.
Right. Around January 5th. Those are always interesting. They show you what the big money, the pension funds, the hedge funds actually did during Q4. Seeing who loaded up tells you a lot about the professional conviction heading into 2026.
Okay, let's switch gears to the charts. Fundamentals are one thing, but what's the technical picture look like? Where's the stock trading now?
Technically, it looks pretty bullish, actually.
Yeah.
It's got a clear pattern, higher highs, higher lows, pretty sustained uptrend.
Yeah.
And the stock's trading comfortably above both its 50-day and its 200-day moving averages. That generally confirms solid momentum, both short and long term.
So where are the key levels investors should watch? Support, resistance.
Okay, so the main support zone where buyers seem to consistently step in looks to be around $200 to $205. That's the level to watch if the market pulls back.
And on the upside, the breakout level.
That's pretty tight right now. Resistance seems to be clustered between $218 and $220. So near term, you're probably looking at a trading range of, say, $200 to maybe $225. Stable but constructive.
That stability point. You mentioned volatility earlier. It seems kind of low for a company with this growth story.
It really is. And that's maybe a hidden strength here. Its beta is remarkably low, 0.83.
Okay, remind us, why should an investor care about a beta of 0.83?
Well, beta measures volatility relative to the overall market, like the S&P 500. A beta below 1, like 0.83, suggests it's less volatile than the average stock.
So if the whole market drops.
Exactly. If the market sells off hard because of, macro fears, inflation, recession, whatever, BWXT tends to hold up better. Those defense contracts act like a cushion. It makes it sort of a defensive growth play, which is pretty appealing.
All right, so time for a reality check. We've laid out a pretty compelling case, strong results, huge backlog, solid moat, nice chart. But let's talk price. The stock's had a good run. What about valuation?
That's the big question, isn't it? That's the challenge for anyone looking to buy today. If you look at the price to earnings ratio, the PE,
Yeah.
it's currently sitting around 66.55.
Whoa, okay, 66.
Right.
That's definitely up there. When you pair that kind of PE with, recent revenue growth, that was what, 8%, even if it's accelerating, are you paying too much? Is all the good news already baked in?
It's steep, no doubt. The PE is high, but you have to consider what the market is pricing in. It's pricing in scarcity, right?
Yeah.
And essentiality.
Hmm.
BWXT is, for certain things, the only provider for critical defense infrastructure.
Mm.
So that PE reflects not just next year's earnings, but this guaranteed-looking revenue stream and the super high confidence that they'll win the next round of contracts too, because, well, who else can?
So the moat justifies the premium, perhaps, but that dependency you mentioned, it works both ways, right?
Yeah.
What's the biggest risk that could actually knock this whole story off course?
Yeah, the main risk is definitely concentration. We've talked about how great it is having one huge, reliable customer, the U.S. government. But that also makes them incredibly sensitive if politics shift, if administration priorities change, or if there are major cuts to the defense budget. Their focus on nuclear propulsion helps. It's pretty core. But a big slowdown in Navy procurement, that would hurt.
You're talking about the whole business model potentially getting squeezed if that one big customer changes course, even with the track record.
Precisely. And then there are the broader sector risks, things that affect the whole nuclear industry, regulatory changes, unexpected policy shifts, God forbid, a high-profile accident somewhere. Though again, the defense focus probably insulates them a bit more than, say, a public utility.
Okay, but on the flip side, the potential upside. There seems to be a lot of speculative buzz, things beyond the current confirmed contracts.
Oh, yeah. The rumors are definitely out there, and some are pretty high impact. The loudest chatter seems to be around a potential multi-billion-dollar new nuclear fuel supply deal from the government.
Multi-billion, okay, that would be a game changer.
Absolutely. It would lock in their dominance for another decade, probably justify that high PE almost overnight if it happened.
And tying back to that Rolls-Royce SMR deal, are there whispers about that leading to bigger things internationally?
There are rumors about maybe strategic M&A, buying up related nuclear tech companies to really solidify their position in clean energy. And yeah, if those SMRs get deployed successfully overseas, that could open up massive new export deals that aren't really baked into anyone's forecasts yet. If even one of those big speculative things hits, you could easily see the stock push well past that $225 resistance level.
Yeah.
So wrapping it all up, synthesizing everything, the huge Q3, that record $7.4 billion backlog, the structural moat they have in defense tech, the bullish chart, our overall view remains pretty positive. Firmly bullish, actually. We'd rate it, say, an 8.5 out of 10.
Okay, 8.5. And the core reason for that conviction?
It really comes down to the mix. You've got strong fundamentals backed by those improving margins. You see signs of institutional interest building. And you have multiple catalysts lined up, near-term catalysts like Q4 earnings, potential contract news. It just seems like a solid stability play, but with real growth potential layered on top.
A compelling combination, yeah.
It is.
It feels like the next few quarters are really going to show whether this whole nuclear renaissance idea is just talk, or if BWX Technologies can actually execute on this massive backlog they've built and really ride these policy tailwinds, prove they're an indispensable, almost utility-like growth engine for the next decade.